right, good afternoon, everybody, and thanks for joining our session. We've got what I think is a really interesting topic. We're going to talk about lending from 2 points of view and from 2 different geographies. So I'm really happy that you joined us today. Briefly, just to tell us who we are, I'm Cherrie. I'm a global industry lead for financial services here at Appian. And I'm privileged today to be joined by two of our customers. And I'll invite them to introduce themselves now. Charla?
I'm Charla Karlek. I am the Managing Director of Business Process Automation at Homepoint.
Giovanni Gallucci from ICCREA Cooperative Banking Group and responsible for the process automation practice.
Great, thanks guys, and welcome. What we're going to do is we'll go through a little bit of a brief introduction about the 2 companies, and then we'll go into a little bit of question and answer about how Appian was applied to the business problems for lending. So, as I teased a minute ago, we've got Homepoint, which is a US-based mortgage company, and ICCREA, which is an Italian-based banking conglomerate. Even though you might think that these things are very different, the challenges actually have a lot of interesting similarities. So before we get into that, though, let's have a little bit of an introduction to Homepoint.
So Homepoint is, as you can see, a national mortgage lender. We do loans, mortgage loans in all 50 states. We are the 3rd largest wholesale mortgage originator in the country. With over 7,000 partners that we work with all across the US.
We've got a little bit of an overview here. It's actually kind of a new company, isn't it?
We are new and founded in 2015. We just went public last year. So new and grew very fast. So to become the 3rd largest.
And I think not to give anything away, but therein lies part of the challenge.
Yep.
Then for ICCREA, I know we have a video. Did you want to make a brief introduction to it?
Yeah, just a very short walk-in order to introduce us as a bank, as a group of bank actually. So yeah, if you want, video is better than words.
I love a little musical interlude. That's great.
Yeah, entertainment.
Well, now that you have a little bit of context for that, Giovanni, could I start with you? I know that not that long ago, the European Banking Authority issued a new regulation on definition of default.
Absolutely.
And that drove you to create a thing called the credit desk. Could you tell us a little about that?
Yeah, the credit desk solution. Okay, we should start by saying that we are a group of 128 different banks, still in a group, but different banks, making different businesses, but following the same processes, the same business rule, etc. So an important percentage of our customers have a position opened in more than one bank of the group. This is what we call shared customer. Now, according to this new regulation, shared customers must have the same classification status in all of the bank, in any of the bank where, sorry, where they have an open position. So in order to be compliant with this new regulation, we decided to implement a solution running on top of legacy systems, but of course integrated with the legacy system. A solution to give the bank a unique tool across all the banks where they can collaborate and they can find out the agreement in order to achieve this regulation. I will tell you some details about this. Let's say a bank decide to change the classification status of a customer, a shared customer. This tool will immediately recognize the shared customer, engage all the bank where this client is present, and in a unique place, give them the possibility to collaborate interactively in order to decide how to treat this classification status. And interactively, because as an example, we have also in this tool the possibility to, we implemented a kind of real-time messaging among the banks. And this message, of course, is tracked by the system, who say what, when. And all this information stay forever together with the classification request. Now, once this bank decided what to do with this request of classification, the system immediately spread the status at the same time, simultaneously, in all the banks where the client is present in order to guarantee the same classification status overall, the banking group for the same client, shared customer. Basically here, Jay, we have process and system orchestration. We have a unique view of customer data in one place for all the banks. We have, of course, integration with legacy system and collaboration. For us, collaboration among the banks is really important because they have to work together. So this is the basic pillars of this solution.
Yeah, that's kind of a big challenge to have 140 institutions all doing the same thing, and then driven by regulation, which gives it a little teeth. But Charla, I understand that also your efforts were partly driven by regulatory compliance, and I'm thinking of the effort that was recognized in the Housing Wire Tech 100 listings. So maybe you could tell a little bit about how that worked for you.
So mortgage is heavily regulated from many government acts, many government agencies, from the federal down to the state level in the US. This particular project was in regards to a regulation set forth by the Consumer Finance Protection Bureau, whereby we're required to disclose any changes, charges, terms, differences to a consumer from the original thing they applied for to what eventually they're going to close their home loan with within 3 business days of receiving that change. If we don't do that, it can result in, obviously regulatory penalties. It can result in reputational risk, but it also results in heavy monetary consequences for Homepoint if we don't do that. So the previous process that we took was highly manual. It was up to individuals to go in and say, I think this change, any change, needs to be redisclosed. And what that actually resulted in was the opposite of what you think, right? We missed some that we needed to, but we were also inundating this team with a lot of things that they didn't need to see. It didn't require a redisclosure. So it was a combination of taking a new process we worked with our IT team to do some custom code. We worked with our decision team, and then we worked with the Appian team to layer in change detection and monitoring of changes that occurred within the system that either resulted in a required change or at least resulted in research to determine if a change was required to be redisclosed. So using those 3, we now present those things into Appian. We're able to orchestrate sending it to the right team with the right prioritization. We retain all of the records historically of everything that changed on that loan, so that way if we get audited, we have those records and are able to say, we disclosed this change happened on this date, we disclosed it in the right period of time. We are able to actually tie in with Appian to our decision engine, which writes really complex quality rules to ensure not only are we disclosing it timely, but we're disclosing something accurately and not making mistakes. And then, the last thing we did was, besides presenting the team only with relevant work, we also were able to create a document for them and automatically upload it that they were previously manually creating for our system of record into our document imaging system. And all of that resulted in a 50% reduction in our total cures, as well as a 20% efficiency for that team.
Wow, I love a story that it starts, well, we had a manual process, because when it gets that complicated, then the question, what could go wrong, answers itself.
Everything.
Well, so turning back to, we talked a little bit about Credit Desk and how that got done, and we hear a lot about how once you've got the Appian application and platform in place, it's easy to extend it. And we talked a little bit before about how that's getting extended into other areas now, including ESG.
Yeah, Jay, sure. In our understanding, the Credit Desk is something that will evolve continuously in the future, covering many other requirements on the lending area. And as an example that we are currently doing, we decided to implement a solution for ESG questionnaire management. This new regulation about ESG, another one. And we are highly regulated, too much. So this new regulation requires us to implement a solution in order to be compliant with the process of a loan, basically, loan request. During this process, for specific type of clients, for specific situation that are managed in our credit systems, we need at a certain point to ask the customer to fill in a questionnaire about ESG topics. Basically, the solution from one side gives us the possibility to create and maintain this questionnaire according to the rules, according to our logic, and from the other hand, through an integration with the loan origination systems, we automatically recognize if the questionnaire should be compiled by the customer. So through this integration, a process is started, and the questionnaire is requested to be compiled. And actually, inside the questionnaire, there are many calculations in order to calculate many KPIs requested for the ESG compliance that should be part of the loan request. And all of this will happen in Appian. And other than this, we will give back to the loan origination systems data, KPIs, both as structured data and as a document with the questionnaire compiled with all the results, showing all the results within the document. So it is an important solution. Why? Because still is used, the same tool used by all our banks. Again, we have this business model. We are 128 different banks, but we need to manage them the same way, using the same tools, same processes, and banking system, core banking system, has not been built to support this kind of processes, because really cooperative banking groups is something different from a usual bank. Let me say, we have a higher complexity to manage.
Yes, and those regulations are kind of new, aren't they? So the one thing we always joke about is like whatever they are today, that's not going to be next year. So.
Absolutely, and here Appian really helps a lot.
Yes, that speed is really important.
Speed and flexibility to change.
So that the the complexity is kind of staggering there, but the mortgage lending is no less complex, right? And you have, I don't remember how many legacy systems that you needed to orchestrate, but it was quite a daunting thing too, wasn't it?
We're still going. So, you know, mortgage lending is obviously very unique. Every loan is different. Every person is different. Every place we warehouse allocate different loans to different warehouses to fund them. We sell loans to different investors. So the orchestration and all the tools that we've built on top of it, right, we need to use Appian, and we will continue to, right, as we progress through the development cycle of using those different legacy systems that have been built, and sometimes hopefully replacing them with better things that aren't manual. Sometimes they're Excel spreadsheets even, right? So we have to keep track of many different written guidelines, many different products, et cetera, all throughout the life of a loan, to ensure not only are we compliant, but that we're also making a good saleable loan for creditworthiness. So one of the examples that I can give is we used Appian to actually be the main orchestration system for our decision engine that calls a unique, very complex set of underwriting quality rules. So the underwriting quality rules really allowed us to pull in all the different guidelines that are written from, you know, Fannie, Freddie, our overlays. They were allowed us to pull in all of the different product matrices, but also to then connect right to our loan origination system to read the current data and ensure that that product were matched up against the eligibility or the requirements that needed to be met to make that loan saleable. It wasn't necessarily that they were errors that were happening that maybe would cause us. We would just fix them really far downstream oftentimes, and sometimes they couldn't be fixed. What we can use Appian for is to allow users, our underwriting associates, real-time feedback to say, hey, there's something wrong, fix it now so it doesn't have to come back, right? It's the stopping and starting of those cycles. You know, even like I mentioned in the redisclosure, we were able to orchestrate that a user no longer had to upload something, and it now ties right to our doc repository system. We have done plenty of things with secure file transfers, and then we're coming up on additional things that we will eventually like to do of our warehouse allocation tool, any of our potential loan delivery requirements that we could then take all those into one place, and the unique systems that have been built around making sure that those are right. The vision is eventually to get Appian to be that one-stop shop, not only for our legacy systems, but we also integrate with a lot of third-party vendors, right? I mean, we integrate with Fannie, Freddie, we integrate with a lot, I mean, the FHA portal. There are so many different third-party systems that only apply in very unique cases, and with Appian, we'll be able to present them to the user. This is when it applies, and here you should go do it, versus right now it's a library in their brain, right, that they have to remember. I have to do all these things on this loan to use that system guidance to get them through, and we started that with those underwriting rules.
Yeah, that also tracks back sometimes into another thing people sometimes forget is when it's all just in the head. Even if people are good at it, the training to get all that information downloaded into each person is tough. And then when the regulation changes to get it spread out, that's even tougher. So just one little, like, is there anything about, we've covered that it's complex. We've covered that it's important and highly regulated and needs to change. Is there any other little attribute you would throw in that you think is important?
I think it's complex, but the nice thing is with what we've been able to do, like with Appian, is the complexity is back here, right? To the front-end user, there's not, like, we've taken the complexity out of it. And then, like Giovanni said, we're able to be flexible. If tomorrow somebody decides we have to disclose them within 2 days instead of 3 days, it's not a big change for us to make. So it's the flexibility of taking the complexity off of the end user.
Exactly, making something complex very simple for who should interact with the system. It's something unbelievable, has an unbelievable value for us. And I would say also, yeah, flexibility in changing is mandatory for us because everything is changing continuously. Everything is changing, and Appian gives us the possibility to react immediately, and the time to market for the change is really fast, and really this gives us a boost in our business, let me say.
I always like to say mortgage and I'm sure banking is we monitor changes. That's pretty much what we do. Something changed, I have to do something with it. Yeah. And the ability to flexibly manipulate when those changes occur and how to take action on them is vital.
It is, and even if it wasn't important to giving the excellent service that you want to give, then there's the teeth in it for the regulators. So you need to watch out for all those risks that you mentioned earlier. So. And every time I hear about ICCREA, like I'm sort of used to the mortgage complexity, but wrangling 140 institutions of any size, that's a whole nother level. Well, we would very much like to engage everybody and answer questions, but these sessions are very time efficient. So what instead we'd like to do, instead of taking them in the room, we'd like to invite people to stick around for a few minutes afterwards, or to reach out. I know that both Charla and Giovanni are happy to answer questions later on. And you can even meet in the community hub in the exhibit hall and dive into this a little more deeply. But for now, I'll thank you guys for your time.
Thank you, Jay.
Coming and explaining all that. I love those stories, and thank you all for coming and for your attention.
Thank you.